Give you a little bit of background on myself. So I'm from Ohio. Flew down here reluctantly in the winter. It's terrible. Hate to do it. But graduate of The Ohio State. So Buckeyes. That's great. I love it. So I went to law school, did all that fun stuff. Where I kind of focus my efforts is really around business planning and tax planning. So we said, what would be better at the end of the night than to talk about taxes? I love it. That's what we're going to do. I want to give you a couple of tips and tricks, just that I see other folks maybe know that, unless you're exposed to it, you just don't know. So that's actually one of my favorite guys. He was quoted by, if you know Milton Friedman, if that rings a bell to you. So there was a guy, his name's Milton Friedman, if you've heard of him. He was an economist back in the day with Thomas Sowell, if you know Thomas Sowell. Great economist back in the day. And the one thing that TR said kind of made me think of it. He said, it ain't what people know that causes trouble. It's what people know that just ain't so. And I think that's very true. A lot of folks probably are in the notion that, I know this business partner and they did it this way, so that's the way I should do it because they're successful. Or my parents got me the business this way, so I'm going to set it up that way to give it to my kids, and they were successful. But it's the things that you think are so, there's a lot that's changed. The big one that changed recently, which I'm sure you all printed off, have it on your nightstand, it was that big, beautiful bill. 1,000 pages of fun stuff. If you get the chance, I know he's passing out books, but you want to read through some fun tax code? Woo! We'll bring that as a giveaway next time. But there's a couple of big provisions that really affect business owners. So I wanted to touch on that, but anything else you want to ask, feel free to. But I think one of the big things that I would keep in mind as you're kind of going through, what's affecting me under this bill? What should I do to maybe structure myself to sell in the best way? There's some really, really slick stuff. First one I'll give you, it's a way that you can sell your business and not pay any capital gains at all. That's pretty attractive. Not too bad. So there's this fun code section out there, and it's this Internal Revenue Code. They call it 1202. I know my handwriting's a little, you're going to think I went to Michigan, not Ohio State. Nobody's perfect. It's okay. So this code section, I like it. This code section, if you can qualify, you can sell your business per founder and you don't pay capital gains on up to $15 million per person. Up to. That's per person. So if you're married, that's your spouse's amount too. If you've got kids, that's each kid that you have too. That's pretty nice. There's a catch though. So this just came out. One of the catches though is you have to be a C Corp.
Why is that?
That's just how it's structured. So it's only for C Corps. So a lot of you, I'm sure, are probably S Corps or you're a partnership or something like that. That's still good. I would still do that because another great code section I would definitely ask your CPAs about is this other one. It's code section called 199A. Has anybody heard of that one? I love it. This is a really, really nice provision if you're a flow-through business, so that money just hits your bottom line. This provision, they made it permanent under the tax code this last round. And this one says any money that flows through to my bottom line that I don't take as a wage or do write-offs, that money I get to take up to a 20% deduction. So if you made $100,000 that hit your bottom line, you're only paying tax on 80. So one thing I would ask all your CPAs out there is, am I maximizing my 199A deduction? Because if they're saying, well, you should take a W-2 wage, you should do all these things, do all of that to be reasonable, but as much as you can push to the bottom line, that's going to improve your cash flow. Keep the money that you should be keeping. Pretty nice. The other thing that's real nice if you're an S Corp too is if you take money out as a distribution, you take it as that bottom line, it's coming to me money, you don't pay what they call self-employment tax. So you don't pay FICA and FUTA, so Social Security, Medicare, all that stuff, you don't pay it. That money just hits your pocket a little better. Not too bad. Taxes are fun, even at 8 o'clock at night. I can feel it. It's good stuff. So leverage that one.